The world is changing unbelievably quickly right now. And if you're not on top of the changes, you're getting hammered. And it's happening in all kinds of things. We're digitizing everything, right? Remember 30 years ago, you had to have a camera and you took the roll of film in to get it developed. And now you can put pictures on your phone. You can send them around the world. You can listen to music on your phone. You can talk to people on your phone with video. I mean, these things were unheard of. I'm going to give you like a little secret on how you can retire earlier by using covered calls. And I'm going to show you how easy it is to do it. So it's a 3-step process. And I just want to show you how you can go from, I don't know what stock to buy to, wow, I can really see my retirement happening. Watch this, and I'm going to show you the result and how it can affect you at the end of this. So here we go. So the first thing you're going to need to do is you're going to need to find a stock. I don't know. I figure most people are involved in Facebook, at least we know what it is. And it's a pretty decent stock. It happens to be at a pretty good buy point right now as I record this video, but this is just an example. So it's called Meta now. They don't even call it Facebook, but Meta is apparently, the name of it. And the stock is right around $538. You can see that on the chart there. Pretty good looking chart, right? I mean, if you look at way back a year ago, it was a lot less than it is now. And so you like that trend to go from lower left to upper right. It has a lot of the fundamentals that I look for too. And I teach you how to do this if you want to be one of my students. But, one of my students, David, he really just invests in a few good stocks and he gets about 40% a year, except for 1 year where he didn't do very well. And that was during the bear market where he didn't follow his own trading rules. But most of the other time he does incredibly well. And it's stocks like Meta. So we choose a stock like Meta. The next thing we're going to do is we're going to find an option. Now, if you don't know what I'm talking about with an option, you need to go do a little bit of homework. But essentially an option is just you're selling somebody the right to buy your shares at a predetermined stock price on a predetermined date. We're doing something called covered calls. So I'm going to show you how that works. It's really simple. You buy the stock and you sell somebody the right to buy your stock from you anytime before it expires at a certain price. Meta is trading at about $538. You can see this is what's called an option chain here. It's $538. And so what we're going to do is we're going to go here to the 540s, which is at the money options, and see where it says $7.75 there. Okay. You also see it 775 here on the bid. You see it over here on the time value. That's what we're after. Okay. So that 775 is about, 1.5%. Let's just to round it off. Okay. And so that's in a week. Notice how it says 7 days. So if I can get $7.75, let's say I have 1,000 shares, that's $7,750 in a week. Okay. 100 shares is $775 in a week. Doesn't matter. I'm just going to give you the percentage now because you're going to have to do your own math. All right. So now we've got the stock. That's step one. And number two is we find the option to sell against it. I'm just going to choose the 540s because it's a number that's just slightly out of the money. And that's where I think the stock is going right now. All right. So now we've got those two steps. By the way, at 1.5% a week, that's about 6% a month. We're not going to shoot for 6. We're going to say, some weeks we're not going to get 1.5%. We're just going to try to collect that 1.5% on an average, right? So let's just say on average, we get 1.5%. Let's round it down and say we're only going to get 1%, which is basically 4% in a month. You with me? So now we're getting 4% in a month, okay? And if we could just do this over and over again, and I know the stock has to go up and I know the market has to be right, we have to have not crashes, but I can't predict all those things. I just have to tell you what happens if you do this strategy consistently over the years, okay? So what we're going to do is we're going to go to investor.gov, okay? Go to investor.gov and you're going to go to the financial tools and calculators, and it's going to come up with the compound interest calculator. So click on that compound interest calculator and that'll bring you to this screen. And that's really simple. Now let's say you have $200,000 to start. Maybe more, maybe less. Doesn't matter what it is. You put your initial investment. Now, we're not going to be adding anything to this other than what's generated inside the account. And the idea is we're not going to pull out the money now, right? We could if we have a big enough portfolio, but we're not going to pull up the money now. We're just going to leave the money in there to compound, just so you can see what it's like. Let's say that you're 50 years old and you're going to let this run for 15 years till you're 65. Perfect. And then you put in 15 years. And then you say, well, 4% a month. Remember, we're discounting it from 6 down to 4 just for, some flub factor, right? We're discounting it quite a bit to 48% a year, which 48 divided by 12 is 4% a month. And so you say, okay, I'm going to try to get 48% a year on average. Some years you might get more, and some years you might get less. But let's just say we can get 48. And I know it sounds to a lot of people like it's crazy, but I just showed you how 1.5%, 1.4% is on Meta, and you can get that every week practically, right? If Meta stays the same, continues to go up like it has been doing for years. All right, so we've got 48% in there. You can put whatever number you want, but 48 goes along with my example. Okay, and we're going to compound this monthly, right? It's 4% a month. And then we just hit the calculate button, and after 15 years, you can see the number. 15 years, you will have $232 million. Okay, sounds preposterous, doesn't it? Well, the numbers don't lie. The numbers are really, if you look at the early years, you can see that the numbers don't go up that much, right? In 3 years, you got 820,000 because you're really compounding it well. But according to this graph, it doesn't move that quickly. But look at how it ramps up. That's the beauty of compound interest. And it goes to this crazy number of $232 million after 15 years. Okay, well, gosh, I don't know. That seems pretty aggressive and pretty unrealistic to me. The numbers get stupid. So let's cut the numbers in half. Let's say you can only get, instead of getting 1% a week, you only get 0.5% a week. Okay? Well, that turns into a 24% per year number. Well, that's not bad. If you can compound it monthly, great, because we're getting this on a monthly basis. It's still $7 million. Okay? So all you have to do is do this 3-step process. You find the right stock. In this case, we choose Meta. We find the right option to sell against it. And based on my calculations, I'm choosing to sell the slightly out of the money call options on it. Okay? And then we're not even counting what happens if you're out of the money and you get the appreciation. And we're also not counting on the other side what happens if the stock goes down. We're just doing an average. Okay? And we think the stock is going to stay the same or go higher over the next 15 years. Now, if we do that, then the third step comes in where we can do the calculation. And now, can you live on $7 million in your retirement? Can you live on the other crazy number that we put in there, right? And so all you have to do is say, well, I'm going to pull out 10% a year, right? We're already showing you how to make 24 to 48, but you pull out 10%, you're still going to be living on 700,000 on this lower number. So I hope you can see that if you start to think a little bit more long-term, rather than what's going on this quarter or this week, you're just going to try to shoot for making 1.5, 2% a week. You find a good quality stock in the right market, at the right spot on the chart. Of course, you have some things that you have to do. You have to correct things when the market goes down and things like that. But on average, if you just kind of leave it alone and just collect that money week over week over week for 15 years, you're going to have an incredible amount of money at the end of it. So do you see why I get so excited about this? I mean, it's cool. The numbers are ridiculous. And they're amazing, right? And so you just saw it. Now, if you temper those numbers for yourself, they're still pretty darn good. But the main thing that you have to do is, if you're going to do covered calls, have a system. Just make sure you learn some kind of a system. Also, I want to thank you for sticking all the way to the end of this video. So if you want to get a hold of my free newsletter, it's an email newsletter. It doesn't cost anything. It's called Insider Tips. Go to the link below this video. And it'll be the first thing in the description. You should be able to just click on that, or you should be able to just cut and paste that, put it in your browser bar, and sign up for the newsletter. And it comes to you free once a week. I hope you're as excited about retirement possibilities as I am with a system like this, because this will allow you to retire earlier rather than later.